few months ago, I did some videos talking about why I'm dumping my Dubai properties. What happened in the end is that I did actually sell 2 of them. And today we're going to talk about how I performed, what was the ROI, and also why I sold it and the reasons why I think you should be interested, and why I think one of those properties was a mistake to sell. Hi, this is Jeremy from Millionaire Migrant. So I left the UK in my 20s, I explored the world, and I started to diversify everywhere within every different asset class, but also starting a business. I met my wife in a foreign country, and I have advised 11,000 people in how to obtain legally a second passport or a residency, and now also tax residencies and corporate structures. So we're going to talk about today specifically real estate and how you should be looking at Dubai as part of your overall global portfolio. Last week, I was mentioned in the Financial Times talking about why Dubai is one of the main prime property spots in the world. And I talk about it later in my LinkedIn post, talking about why, if you add the 4 main ingredients of Dubai in terms of property, you've got tax, you've got a residency, the golden visa, you've got the property itself, and then the larger macro situation regarding Dubai, and why these 4 fundamentals were actually an integral part of my playbook to profitability in my personal life and my business life, but also why I just think that even whether you like Dubai or you don't, the whole point of real estate or any investment is not to be emotionally involved. And I think everyone should have some kind of exposure. Even if today I have sold 2 of those properties, not today, it was actually a week ago for one and a few months before for the other, I still hold a lot of properties in Dubai. And the reason being is that there is still a lot more time to go. We are still on an upward curve in terms of a country. There is still the most popular residency program in history, that is the golden visa program. You still have all these countries that are pushing out all these talented and wealthy citizens from their countries and seeking new pastures. So this particular property was in JLT. It was in the Bonington Tower. There's a bit of a sad story at the end, which I'll come to and I'll tell you about later. But essentially, it's been an emotional purchase for me, which rule number 1, don't make it emotional. I bought it. It was the first property I ever bought in the UAE. And I know many people who've lived here for decades who still don't buy in the UAE. That's their personal choice. I think they'll be kicking themselves when they see that the whole idea is whether you believe or you don't believe. The whole idea is to be diversified. Now, I bought this property for 854,430 dirhams. The price per square foot I paid for it at the time was 1,139. We'll come back to a little bit later how much I sold it for, but you'll see that including the rent that was pro rata to me, I sold it at 1,786. Another thing that was interesting is back then, that was when they still charged the 2% Dubai land apartment, which they changed, I think about 2012, they increased that to 4%. I remember a lot of people rushing to get in before it got to 4%. That also helped to push up the yield on the property. So the capital gain I made net is 428,481. That means that I got a net return just in terms of capital gain of 48% on the original purchase price. Then if you want to add on top the rent collection that I got, the total net rental income was 1.1,038,142. So if you put the 2 together, you have a total net gain of 1,566,623, which works out as a 176% return, is a 14% ROI. Not bad. So in the end, yes, I sold the apartment. I did sell also because the service charge was going up, because the rents were softening. Instead of getting a kind of like the rental yield, the average was good, but it was starting out at, as I mentioned, 12%, and then it started to soften and it was getting down to about like 6.5%. And you can pretty much get that on villas right now between 5 and 6. So what was the real point? And then also the building was getting older, and there's a lot of new buildings. So I mean, Bonington Tower is about 20 years old, something like that. So it's still a great building, by the way. It's still got McGettigans. It's still a nice hotel services and lobby and all of those matters. But that also pays into the service charge. That's kind of what you're paying for. So yes, still one of those good iconic buildings and got a lot of facilities, but it's old. And there's new stuff coming on tomorrow. So people say, I want a new apartment. I also want to add that I was offered 1.35 around December 2024, and I declined that because I know that many years ago in the previous peak of the market, it reached around 1.4. And so I was pushing for, I think I said 1.4, and they said 1.35, take it or leave it. Probably should have taken it then. If I'd done that, I would have been number 1 for the last 3 years. But I think when I knew that, when I looked at Property Find, and we'll pull up some of that, and you can still see those apartments available for now, they're all for sale at 1.3. They're all listed, sorry, at 1.3. which means you're not going to close at 1.3. There's already a few on there. There's must be half a dozen. So like 5 or 6. That means they're going to be closing 1.25. So I know already that and if you see the chart, it's falling off at the end. I sold at the right time. I could have sold at a better time, and I did have the offer, but at the time I was just trying to get a bit more. But when I realized that everything else was starting to ebb away and people weren't listing at 1.32 or 1.35, that essentially that was the best time. And so I had to hold up to try and get something. And luckily I got the last highest price in that market. Congrats to the two guys. Maybe it was one guy or girl as well, that sold in May. But in the end, it wasn't, I can't be everywhere all the time. And I think in the end, I got a good deal. I'm very happy to my real estate team. I have a very small team. They're salaried people. They're not commission only. And they help me to run the numbers and just say, hey, heads up on this in terms of new opportunities to invest in. I'm still looking in Dubai, by the way. You should always be looking in Dubai. But also just like, you know what? I think I'm going to call quits on this one. So if you would like to get access to my team, and we are different to other people in terms of not just that we're salaried, but also we use a lot of data to make investment decisions. We've actually done reports, we do guides as well. If you want us to do a custom bespoke feasibility study, we've had clients pay us for that as well. And they have then gone on to invest and get extremely good opportunities. Some of our clients have 2x their money in about a year, 15 months. So we don't do it for everyone. We don't promise. It's just if you want to use another company that is not highly motivated to get you to buy at any cost, then reach out to, the guys here. I think we'll expand the team a little bit. Again, I don't want to have loads of people. I'd rather have salaried people so they can do the best decisions for the consumer, for the client. But if you just zoom out from the UAE, one of the reasons why it should be part of your portfolio, and I'm not biased at all. I've bought over 30 properties in 11 different countries and I've made good returns. None of them being as good as Dubai. One important detail I find a lot of investors, when they look overseas for opportunities, is that they overlook the sweet spot that the UAE has, which is the intersect between the emerging market returns, which is the yield and the capital growth and the story, the trajectory of that country. But it has mature market fundamentals, which is accurate transaction data and a mortgage industry for non-residents and for residents that gives you very attractive lending rates at decent loan to value opportunities at percentages. So what that means is that if you add the two on top, so you've got the upside of the yield, the upside of the capital appreciation, but you have the data and you have the ability to be able to get finance, which also increases liquidity in the market. If you think about that as on top, is you put those two together, then you're really playing the arbitrage game between the upside of the returns against the cost of financing that opportunity. And also don't forget that the UAE currency, the dirham, is pegged to the dollar. So you've got a lot of stability in the currency as well, another benefit. And then if you think about playing the arbitrage game, you're going to get much, much higher ROI. I mean, using this property, for example, if I had used a mortgage on this property, my return would have been 42% annually, cash on cash return. So on the money I would have put down as a down payment and the closing costs, it would have been 42% annual ROI. So that's extremely attractive. And the other thing is that the lending rates in the UAE is sometimes a little bit less than you would in the US, which is a bit strange considering the dirham is pegged to the dollar, but you're actually going to borrow at a lower rate in the UAE, sometimes not much, but a small amount. So here it's about 4%, but in the US is a little bit more than 4%. So you put all this together, it is a very unique opportunity to be investing in a forward growing country that has enormous potential, but has a lot of other components to it that other countries don't have. Think of it like this, and you will understand why in the past it would have been great. It's still, I kept saying, no, I won't buy any more property in Dubai. And then I ended up buying. And then I also said I sold and then I regret selling. So in the end, the story is there. It's like, I probably should have sort of kept. Maybe the Bonington, I think that one I'm 100% sure on, but I sold a commercial unit. In hindsight, it went on even higher. The villa, I'm sure, is going to go on higher. So, in the end, there's a lot of reasons still to invest in the UAE. And I guess if it's for personal use or for your golden visa or for Airbnb, which is booming, by the way, I've been staying in some Airbnbs recently. It's like there's a lot of money in that as well. So yeah, all in all, the one part of the whole story that I think is the takeaway from this one is that why I didn't get the mortgage. If you've ever seen any of my videos, you'll understand that I never wanted to be a business owner. I never wanted to be an entrepreneur. I never wanted to make money and all that type of stuff. I fell into that situation because of the situation that happened after the global financial crisis. So when this opportunity came, it was literally most of the savings that I had at the time. And I just went all in. I put it all in, and I bought that property. But I couldn't get a mortgage because, post global financial crisis, it was very difficult to get a job, especially knowing my background, which is I've worked in real estate for 2 decades. But that was a decade ago. I didn't have any track record. I didn't have any steady income. I was taking odd jobs here and there. And so it was a big risk, but I am a calculated risk taker. I'm very thankful because it's obviously given me a good return. And then, from this experience, I pushed on, but I couldn't get a mortgage. And so it had to be cash. If I had got a mortgage, if I had had a job, a stable job, and I would have got a mortgage. Again, it was after financial crisis, so maybe back then credit wasn't so readily available for property owners. Probably there would have been that. Then obviously the return it definitely would have been a lot higher. As I mentioned, I did also sell a villa. I'll probably do a separate video about that if you guys are interested. Completely different scenario because the purchase price was higher. There was also a mortgage, so it was kind of showing the ROI you can get using the benefits of leverage. And so that one was quite interesting and actually works out at a higher cash on cash return. If you do want to know more about this, please reach out to us. And to that little chap who put you got lucky. I got lucky twice, so I'd love to hear your thoughts on that one. By the way, I do invest in other countries. We're looking at Georgia, Colombia. There's not many amazing countries out there you can invest. Dubai is still a great, safe place, medium to long term to invest. So if you are interested, reach out to the team and let us know what you're looking for. Thanks very much for watching. I'll see you in the next video.